Have you ever wondered if we're living through the beginning of the next economic boom or standing on the edge of a massive collapse? With interest rates dropping, Bitcoin surging past $100,000, and the housing market defying gravity, 2025 could be the most important year for your finances in decades. But the real question is, are you prepared? Economic shifts have always shaped history. From the Great Depression in the 1930s to the financial crisis of 2008, these turning points have defined generations. Understanding where we stand today isn't just about predicting numbers, it's about preparing ourselves for what's next. Economic change doesn't just impact Wall Street. It affects your job, your savings, and your future security. Hey everyone, welcome back to Wealth Steps. Today, we're diving deep into what 2025 has in store. From the Federal Reserve's decisions to the stock market's record highs, Bitcoin's rise, and the unpredictable housing market, this is one video you don't want to skip. History has a way of repeating itself. Whether it's the speculative frenzy of the roaring 20s or the tech-driven mania of the dot-com bubble, the warning signs are eerily similar. For example, before the 2008 financial crisis, the housing market seemed unstoppable. Today, rising home prices despite high mortgage rates feel eerily familiar. So, are we headed for another crash? Or is this just the start of a new economic golden age? The Federal Reserve and inflation. What's really happening? The Federal Reserve plays a central role in shaping the economy, and their recent moves have everyone talking. Just recently, they announced another 25 basis point rate cut. While it sounds like good news for borrowers, it's a double-edged sword. Lower rates mean cheaper loans, but also the risk of prolonged inflation. Deep dive, the role of interest rates. Interest rates affect almost every aspect of the economy. For example, businesses benefit from cheaper credit, leading to increased investment and growth. However, prolonged low rates can create asset bubbles, where stocks and real estate become overpriced. Inflation, although cooling, remains persistent in areas like food, housing, and insurance. Expert opinions. Nobel laureate Paul Krugman recently noted that inflation is sticky because of factors like rising healthcare and shelter costs. Meanwhile, other economists argue that the Fed's cautious approach could lead to stagflation, a period of high inflation and stagnant growth, something we haven't seen since the 1970s. Historical comparison, the 1970s. In the 1970s, the Fed's missteps caused inflation to spiral out of control, leading to skyrocketing interest rates and a deep recession. Countries like Japan have also faced decades of economic stagnation after similar struggles with inflation and interest rates. Could the US face a similar fate? The stock market, boom or bubble. The stock market is on a tear. The S&P 500 is up over 30%, marking one of the best years of the century. Historically, such strong performance is rare, but it's also a potential warning sign. When markets soar this quickly, corrections often follow. Breaking down the numbers. In 2025, tech stocks have been the main drivers of this growth. Companies like Tesla, Nvidia, and AI-based startups have seen exponential gains. However, such rapid growth often masks underlying vulnerabilities, such as over-reliance on speculative investments. The Buffett Indicator, Warren Buffett's go-to metric for market valuation, the Buffett Indicator, suggests the market is significantly overvalued. At 208%, we're in territory not seen since the dot-com bubble. During the late 90s, speculative investments in unprofitable tech companies drove valuations sky high. When the bubble burst, it wiped out trillions of dollars in market value. The similarities to today's AI-driven stock frenzy are hard to ignore. Counterpoint, optimistic projections. Not everyone agrees we're in a bubble. Major banks, including JP Morgan and Goldman Sachs, are predicting the S&P 500 could climb to 6,500 or higher next year. They argue that innovation, paired with easing monetary policy, will drive sustainable growth. The question remains, who's right? Bitcoin's rise. What's next? Bitcoin has hit $100,000, a milestone many thought impossible just a few years ago. This digital currency, often dubbed digital gold, is becoming a key player in the global financial system. But is this the beginning of mainstream adoption or another speculative bubble? Real-world adoption. Major companies like Microsoft and Amazon are reportedly exploring holding Bitcoin as a reserve asset. Additionally, countries like El Salvador and even Switzerland have started integrating Bitcoin into their financial systems. Pro-Bitcoin policymakers in the US and Europe are gaining influence, signaling a potential shift in regulatory attitudes. Historical parallels. Gold in the 1970s. Bitcoin's role today mirrors gold's rise after the US abandoned the gold standard in the 1970s. As trust in fiat currencies wanes, Bitcoin is positioning itself as digital gold. However, just as gold prices experienced volatility in the 1970s, Bitcoin's future remains uncertain. The role of central bank digital currencies, CBDCs. As governments around the world develop their own digital currencies, Bitcoin faces competition. Will it remain the dominant decentralized currency, or will CBDCs change the game entirely? Housing market trends. What's driving prices? Despite mortgage rates at 20-year highs, home prices continue to climb. Cities like Detroit and Chicago are leading the pack with double-digit price increases. But what's driving this trend? Limited inventory. A major factor is the limited housing inventory. Baby boomers are staying in their homes longer, while new construction hasn't kept pace with demand. This mismatch has created a seller's market, pushing prices higher. Affordability crisis. Affordability remains a major issue, especially for first-time buyers. While lending practices are stricter than they were in 2007, the affordability crisis mirrors some aspects of the housing bubble. If prices continue to rise, we could see a tipping point where demand collapses. Zillow's predictions for 2025. Zillow expects home prices to rise another 2.6% next year, driven by limited inventory and steady demand. However, experts warn that such trends aren't sustainable in the long term. What you can do to prepare for 2025? Economic uncertainty doesn't have to mean financial chaos. Here's what you can do to prepare. Diversify your portfolio. Now more than ever, diversification is key. Spread your investments across stocks, bonds, real estate, and even a small allocation to Bitcoin to hedge against uncertainty. For example, an investor could allocate 50% to stocks, 20% to bonds, 20% to real estate, and 10% to alternative assets like Bitcoin or commodities. Keep cash on hand. Cash isn't just for emergencies. It's also a powerful tool to take advantage of market dips. Having 6 to 12 months worth of living expenses in cash ensures you're prepared for unexpected events like job loss or a market crash. Invest regularly. Don't try to time the market. Focus on consistent contributions to your investments. Over time, this strategy outperforms speculative bets. Dollar cost averaging, investing a fixed amount at regular intervals, is an effective way to build wealth while minimizing risk. What to watch for in 2025? The year ahead promises to be eventful. Here are two main scenarios to watch for. Soft landing. The Fed manages to balance inflation and growth, leading to steady economic gains. This scenario is ideal but requires precise policymaking and favorable global conditions. Hard landing. Inflation reignites, forcing aggressive rate hikes and a potential recession. Geopolitical tensions or unforeseen events could accelerate this outcome. Technological and geopolitical trends. Technological advancements in AI and renewable energy will likely shape the economy in 2025. Additionally, geopolitical events such as tensions between major powers could significantly impact global markets. Staying informed. The best way to navigate this uncertainty is to stay informed, stay diversified, and stay disciplined. Use financial news platforms. If you found this video helpful, hit that like button, subscribe, and let me know in the comments. What's your strategy for 2025?